Good evening, traders. Welcome to this week's Forex Focus. I hope you are all doing well. What we're going to do in this show, as always, we're going to take a look at the major currency pairs and take a look at what opportunities could be setting up for the week ahead. But please remember that what I talk about in these videos, it's not trading advice. I'm just talking to you about what I'm looking to do with my own account, with my own portfolio, and hopefully what that will do is that will then give you an idea as to what to look at. But you still need to go away and do your own analysis and decide for yourself whether or not those opportunities make sense for you, make sense for your level of exposure and your overall portfolio. Okay, so with that being said, let's start off by taking a look at the Aussie dollar. Now, the Aussie dollar here has been interacting with this resistance level here that you can see on the daily chart at the 0.6405. So it's been back and forth around that chart there, or around that level rather. And what we're looking to do here is it does look like the momentum is to the upside. Obviously, there's a lot of negative sentiment towards the dollar. And it is a kind of a case of looking for long opportunities above this level and short opportunities below this level. And at the end of last week, we had a long opportunity present itself. So we had the market close above this resistance level over here, which if we go and take a look at that on the 4-hour chart, you can probably see it better. So above this resistance area over here, the market broke above there. It didn't close above there, sorry. So it broke above that level. And now what we're going to be looking for is we're looking for a close above that level. So when we get, and it can be on a 4-hour chart, it doesn't just have to be the daily or the 8-hour chart, but once the market closes above that level, that will be your signal to get in on the long side. Now, if you aren't going to be in front of your screen, if you aren't going to be able to check it regularly, the other thing that you can do is you can set an order to get you in above this level here. So this is above what we call the momentum candle on the, well, it's a momentum candle on any chart, but you can see it on the daily chart here, which is a big body candle, and the close is relatively close to the high of that candle. So what we then do is you then set an order above that level to buy above there with either a 2 ATR stop or a 2-bar stop. So either one will work, and that will basically put you in and around the 0.6358 level. And I do think if we do break above this level, then we will get at least a bit of an extended move and enough to be able to take profits, even if the markets eventually turn around. The next opportunity that we have is the euro dollar. So the euro dollar, there's a few ways that we can play this. Obviously, if we look at the bigger picture, the broader context, we can see that the market certainly is in an uptrend. However, over the past week, the markets or the US dollar's recovered a little bit. I think that and I'll zoom out here so I can show you the exact level, if the market gets back to the 1.1217 level, then that's going to be a good area to put an immediate buy. It's not to say that we'll get a complete sort of, resumption of the trend here. That may not be the case, but if we were to look at this from the 4-hour perspective, because you can see that price action on the 4-hour, and we were to take an ATR, 2 times ATR 45, so that's 90 pips. If you were to put in an order at that level, okay, even if we get a very small reaction, you can see that it doesn't even need to break this downward sloping trend line in order for us to be able to take our profits if the market gets down to that level. So can we expect that sort of a short-term reaction to such a big level? I would say so, and that's one of my favorite trading approaches is based on looking at small reactions to big levels, which I'll show you later. A trade that we identified last week played out very well this week, and actually could have given you 2 opportunities that paid very nicely just trading this exact way. Now, if the market were to break above this trend line before it touches this level, then that would be your other way to get into the market on the buy side. The way that I typically like to take trend line breaks is not just wait for the market to break the trend line, but actually wait for it to break a level in addition to the trend line. And what I mean by that is if the market breaks above this trend line here, then I'm going to be looking to the left at this high over here at 1.1377. So that's the high of this 4-hour candle. And that's where I have my order in. So that essentially what I'm doing is I'm waiting for the market to prove to me that it's ready to break out to a level, rather than just sort of taking a break of an arbitrary trend line, which some people think are subjective. And from that from that perspective, what we want to do and the way that I work for my traders is that we use these technical terms or technical tools, but we want to have our entries as objective as possible, which means it's something that you can repeat again and again and again. And it's not something that's just down to your interpretation of the markets. Sure, we're looking at this trend line. You need to interpret that. But ultimately, your entry is based on an actual high that the market has printed. Moving on to the next opportunity, that is the pound dollar. So the pound dollar here reacted, and we talked about this last week, didn't we? We said that we were looking, if the market gets up to this high over here, then we would expect some sort of a reaction to that high. And that's exactly what we got. The market got up to that level, it then sold off away from that level, which is what it's doing at the moment. The next opportunity is either going to be a bounce from this level at 1.3200 if you're feeling particularly aggressive. If you're a little bit more conservative and you're happy enough to miss the opportunity by waiting for a more conservative entry, then you could go down to the wait for the market to get down to the 1.3051, so about 150 pips below this level here at the 1.32 to give you a bit more of a conservative entry. But either of them work well. I would be more inclined to look at this level over here, so be a little bit more aggressive because I think that the markets are calling for that at the moment. But you just have to accept that if you go with the more aggressive entries, you know, your win rates, you'll have a higher volume of trades, and you will make money. It is a profitable way of doing that, but your win rate will of course decrease as a result of that, because the more conservative trades, you'll have fewer of them, but you'll have a higher win rate. Some people prefer to trade like that. Some people prefer to be more aggressive. It really just comes down to your trading style, your approach. Moving on to the New Zealand dollar. And so the New Zealand dollar here is a little bit like the Australian dollar in that it was in a big downtrend, but the market has broken above structure. We've got previous support, which becomes resistance over here on the 1st of April. The market's broken up above that. Now what we're looking for is we're waiting for a resumption of this uptrend here. We talked about something similar on the euro dollar in that you have a downward sloping trend line. So we can either take an immediate bounce from the 0.5858 if the market gets down there. If it doesn't, then what we can do is we can look to take a buy above the recent highs, which happens to be this high here. If I zoom in, you can see that this high here is very close to this high back on the 29th of April. So essentially a break above 0.5984 would be a good buying opportunity in the New Zealand dollar. If the market sells off from here, it doesn't get above there, then obviously we're waiting for it to pull back to 0.5863 before we get into the markets. Looking at the dollar CAD, there isn't really any setup that I love the look of at the moment in this particular pair. The major levels that I have in here is I've got 1.3948, as you can see here. So that could be a potential area to sell if you wanted to. From my personal perspective, I think there are better opportunities out there, so I'm not going to look to trade this next week. However, if we get a big move up towards this major previous level of support at 1.4150, then I'd be tempted to take that trade and to sell from that level. So from the dollar CAD perspective, I'm going to be more conservative, whereas with some of the other opportunities, I'm willing to be a little bit more aggressive. Okay, so I wouldn't take this first level, although you could trade it. It's completely valid. I'll be waiting for the level about 200 pips above up there. The dollar franc is the one that we talked about this last week. It paid quite nicely last week, so you can see that essentially, and actually it paid the week before as well if you take a look. So if you look here, what we do is we take immediate bounces from levels, right? So we identify this as being a resistance level, and we use a 2 ATR as a stop. So we've got that in there at around 44 pips. Okay, so 44, 2 times the ATR, so it gives you about a 90 pip stop loss, okay, which puts you just around this area here. We can see that the market didn't get anywhere close to there, and then the market obviously broke down, and you can see here it was 90 pips was got very quickly. The market came back to that level last week over here. Again, pretty much touched it pip perfect. We don't need it, but it's nice when that happens. So we didn't spend any time underwater in this trade, and then as you can see, we were able to take profits very quickly as well. And the great thing to do with trading this approach is that you don't need any big, reactions. We're not looking for big resumptions of the trends or anything like that, which is what a lot of other trading systems are based on. We're just looking for small reactions to bigger levels, and we can be very, very profitable doing that. The final one is the dollar yen. So the dollar yen here didn't get back to the level that we were looking at, which, as you can see from the daily here, is around the 146.29. So this sell-off here, we weren't able to profit from it. But if the market gets back up towards that level, then we certainly will become sellers from there. Because as you know, our sentiment towards US dollar at the moment is very negative. So any opportunity we have to sell the US dollar, we will take advantage of, particularly if it's in trades like the unwinding of the carry trades or some of the more safe haven plays like the Swiss franc or the Japanese yen. Okay, so that being said, I hope that was valuable to you. If you have any questions at all, please feel free to post it in the comments below. Otherwise, have a fantastic week in the markets. If you haven't already subscribed, please make sure you subscribe. You hit the bell so that you get a notification. You give it a thumbs up as well, just because that makes me happy. And then I'll look forward to speaking to you next week. Okay, so good luck in the markets this week, guys and girls, and I will speak to you soon. Take care now.